Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for October 17th, 2021. We're just a couple weeks outside of the Halloween holiday here in the United States. It's almost spooky time. So if you're in the United States and you do celebrate, somebody remind me next week to put up my Halloween decorations. I would appreciate that. I hope you guys are having a great weekend. We have a lot to talk about, and we have a lot that has actually happened this last week. A continued move in the yen on the way down. We are reaching some targets. So we're going to talk about the yen, and then we're also going to talk about this next week. You know, you got China GDP that's coming out Sunday night, and you know, a lot of people have been discussing stagflation in China, so we'll probably get a little bit better of a look at Chinese GDP actually this next week. And there's a lot of European data coming out this next week. So we're going to talk all about that. But before I do that, I brought up our homepage that you're seeing here. Now, typically it has a trial. You know, for $1, you get 10 days of ForexAnalytix. That should be back over the weekend, and it might even be by the time you watch this video. If not, the special pricing is still up. The developers were supposed to switch that this weekend already. Hasn't happened just yet. So if you do want to take advantage of the special offer, just click on it because it's there. And it's, you know, the prices are ridiculously cheap. But if it's not there by the time you come back, make sure you take a trial of ForexAnalytix. It's only $1 for 10 days. Try it out. You get the premium version. Download the mobile application. We're revamping new technology in the mobile app. It's been in development for the last few months, adding a couple of tweaks, but it's, you know, the mobile app's going to look a lot the same that you see right now. So download it on the iOS or your you know, if you use a Samsung, you can go to the Google Play Store, or, you know, some sort of Android device. Make sure you download it, and like I said, try it out for 10 days. You know, for $1, you get to try all the premium stuff. And then if you decide to keep it, and even if you want to go with the light version, you can do that. But, you know, you still get, even though you don't get the chat rooms, you still get all the private ForexAnalytix webinars that we discuss a lot of deeper themes than just, you know, just what you see on the F.A.C.E webinar. So I'll see you guys there. And also I need to mention really quick before I go into the analysis, I need to mention that if you haven't subscribed to our YouTube channel, make sure you do so. It's free to do it, and it's also free to give a thumbs up too. So make sure you give a thumbs up to this video if you like this content every week. It is Saturday for me, and the team's working over the weekend to make sure you get this free content. So make sure you give us a thumbs up and let the team know that you really like what you see here. All right, let's go into this next week. Well, actually, you know what? I'm actually gonna start with cryptos, believe it or not. I want to talk about Bitcoin. So Bitcoin's approaching the all-time highs here. You can see we broke that channel. That channel was really holding us for several days. Actually, you can see, you know, we were just targeting all week. We were targeting the 59,000 level. If you you know, went back and looked at the analysis all week this last week. We even warned that, you know, hey, you might, you know, come into channel resistance. The channel tops 49,000 level. That's channel resistance. And, you know, while we're above 41,000, you should see it rally towards that level. And this is, you know, you could see even like the intraday charts, you know, you're pushing up against channel resistance. We expected a new high, and we got it. But there was some news that actually, you know, there's going to be a Bitcoin ETF. That means there's going to be a lot more flows coming into Bitcoin. So think about that. Doesn't mean that it's going to go higher permanently, but with ETFs, it makes it, there's another venue for individual investors to take advantage and be involved in the Bitcoin movement. Get it? Movement. Anyway, because of that, there's a lot of speculation that ETF might be established for Ethereum. I mean, if you look at like the futures brokers, like just Thinkorswim is a broker that I use, which is, you know, TD Ameritrade. They have futures trading for Bitcoin and Ethereum. So Ethereum is probably the next one to go. And so, just looking at this chart, you could say it's a triangle. You can say it's, a cup and handle pattern. Whatever it is, it looks like we're going to new highs, which would mean a move above 4,400 and maybe even towards 4,800, which is the 161% extension of this last move. And then also the cup and handle measured move, basically. Because I measured it like this because using the horizontal resistance, it actually could be a little bit further than that. But considering this matches up with the 161% extension, that seems very doable. So just think about that. As long as risk appetite, meaning stocks continue to go higher, that should keep a bid in these cryptocurrencies, because cryptocurrencies are, as you've heard me over the years talk about, just really the ultimate risk on, risk off tool. Because if you want to take on risk, you want to take advantage of something that might be moving higher. Cryptocurrencies is that new asset class. It's still sexy, I guess, if you want to call it that. It's still, a viable option. I think people will continue to plow into these cryptocurrencies as long as we don't see a complete collapse in risk appetite. Okay. So I'm going to move along. And speaking of risk appetite, let's talk a little bit about the yen pairs, because this yen has absolutely been on fire. You can see the dollar yen. We are rallying towards levels we have not seen since I said 19. It's in 1974. No, that's not true. We're rallying to levels that we haven't seen since 2017. And you can see we're pushing, pretty good resistance. I thought we were actually going to break this 114.50 for the weekend, but we just tested it. I was thinking that on Thursday. I'm like, man, we're going to make a move. But there's a risk that, in the coming weeks, we are going to break that level. I wouldn't be surprised if we see some sort of consolidation here. My thought process on these yen pairs, and if you listen to the free F.A.C.E webinar, by the way, the F.A.C.E webinar is free. It's every day. It's a webinar, so you can actually ask questions from myself or the team. Make sure you click the link down below to register. We've been doing it for 5 years for F.A.C.E. All right, so come join us in the mornings. It's free. Mornings in the U.S. Obviously, if you live somewhere else, it's going to be a different time. But the reason why I bring that up is because on the F.A.C.E webinar, I've been talking a lot this week about the carry trade. And my opinion is, and it may be a little premature, but you have to imagine currencies tend to move, in my opinion, and based on my experience of the last 20 years of watching currencies, since I started trading them pretty exclusively and since 2002, I see currency moves prepare themselves. They start to move months in advance. And then you can look back in retrospect, 4 or 6 months from now and go, I can see why that currency market did that, because it was preparing for this environment. Well, my opinion is, and this is my opinion, is the market is preparing for a carry trade environment. What that means is you're going to see Japanese rates probably near zero, as they've been for, however many decades now. And you're going to start to see rates rise in other countries, U.S., obviously Europe to some extent, but really Australia, New Zealand, Canada. You're going to start to see rates move higher. And the way for a lot of institutional portfolio managers to really capture that is they'll sit in positions as long as stocks hold up, and I don't think this S&P is going to go, if it does, not much more below 4,000 in the, let's just call it the next 12 months or so. As long as the S&P continues to hold up relatively well, let's just call it 3,800, 4,000 or so in the S&P, then I believe what you're going to see is you're going to see rates continue to rise. And as the S&P holds gains, and I'm looking at the S&P right here, as long as the S&P can really hold up above these levels, right? Let's just call it something like this. We hold up somewhere around these highs over the course of the next 6 to 12 months. You're going to have people piling into the carry trade where they're expecting, and we start to see other central banks raise rates. So you're going to see, currencies like the Australian dollar, which is, getting towards recent highs. You're probably going to see a lot of accumulation, above this 200-day moving average, somewhere in the 81 to 85 range, let's just call it. And, the Canadian yen, you're going to see it, as you can see, we're breaking out, but you're going to see it being acquired, maybe above 90 yen in the foreseeable future. Even if stocks come down a little bit, coming into November, which in my opinion, if you look at the S&P, I think the risk is we don't make new highs, and then you get us grinding lower in the next several months or whatever the case may be. But you're going to see these yen pairs holding their ground, and what that means is there's probably massive accumulation from an institutional standpoint, looking to take advantage of carry trades moving forward. So that's kind of my game plan when you look at the yen pairs. The yen pairs, we're going to be looking at more of an accumulation type of patterns. So does that mean I really want to short Aussie yen right now? I mean, it's tempting, or the Canadian yen, because let's go over to the daily chart. By the way, and I took this the other way. Was it a week and a half ago, and it hurt pretty bad. So you start looking at these moves, and you go, okay, well, here we had an AB. Oops, let me take that magnet off really quick. We had an AB equals CD move, and then a continuation, right? So that didn't even stop. The extra 250 pips that you see from there. I mean, when you see moves like that, you have to respect them. And I was talking to Mark Chandler of Bannockburn Forex earlier this week, and I think it was this week. Anyway, we were talking about how we're seeing a new range formed with the yen. Well, yeah, I mean, if we're a 500-800 pips higher, now we're going to be in a 500-800 pip higher range than we were previously. So if you look at the Canadian yen, maybe it was trading between 85 and 89 yen, let's say. Now we're going to be in a 90 to 94, 95 yen range. So that means you probably want to be buying it on dips, right? It goes along with the theme of maybe a longer term accumulation of these yen pairs. But I really wanted to cover those because they are obviously what's moving in the market right now. And, we got stocks that are, have had a nice bounce. So it just kind of put a little bit of, a boost underneath these yen pairs. So anyway, that's how I'm feeling about those. And if you want further analysis, make sure you join the F.A.C.E webinar daily, where myself and the team, we'll talk about these concepts, and we'll talk about, technically where they're at and where they might, find some resistance, and, what type of support levels you could be looking to get potentially long. Also want to cover the pretty big rejection that we saw in gold. I know there's so many traders that are bullish gold. Gold just got slammed down, and I need to talk about gold and the rejection that we saw at 1800, which I was targeting two areas, 1780 and 1800 this last week. So this is, by the way, all the analysis on ForexAnalytix on the basic technical analysis is getting done for the weekend. So majority of it is not done right now. So that's why I can go back and reference stuff we talked about this last week. And you could see 1780, we talked 1780, support at 1720, 1780, and then on the analysis we were talking about the reversal, or excuse me, on the morning edge, and the F.A.C.E webinar yesterday we talked about the pretty big rejection at the 200-day moving average, couldn't hold, and this trend line. So now the reason why I think this is big is because I still think that the dollar is is probing and holding above key resistance. I mean, look, let me say this: we're rejecting key resistance, which is at 95.50, and 95.70 is the spike high from over here. So really, a move above 90. I'm sorry, I just said 95, 94.50 and 94.70. That's really key resistance. It's a 38% retracement on a weekly basis. We talked all about it. A break above those highs right here, the September 2020 highs, is going to expose a lot bigger of a rally. But what I want to point out here regarding the dollar is the pullback has been minimal. And see this shaded area? It's 93.70, 93.50. That's going to be that right there. This is going to be support on dips. I wouldn't be surprised if we see a little push below, like this breakout point. See that? Push just below and then a bounce, because that shakes out traders. You know, if you're long and you're like, oh, okay, if we break back below that support, I'm going to put my stops right there. Market looks for that. You know, like, look, where's the most likely place people are going to get stopped out? And then we're going to look for a bounce right after that. So that's why I'm saying this zone area between 93.50 and 93.70, I believe is really important support. And as long as we hold above those levels, I wouldn't want to be bearish the dollar. And also, why is that 93.50 level support really important? Go back a little bit right here to March. You see March 2021, those highs, that's the same highs that would be right there. So I'm looking at that zone. As long as that zone holds, I think the risk is for further upside in the dollar. Now, how can that happen this week? Well, you know what's happening towards the end of this next week? A lot of European data. So, and obviously Euro being over 50% of the dollar index, that's the currency you got to really watch if you're watching the dollar index. And, Europe and the euro has been trading extremely heavy. If that data comes in a little weaker than expected, you start thinking, okay, weak growth data, inflation, even though Christine Lagarde, just some headlines that came out before I started this recording, she talked about inflation being transitory. How about if it isn't? Well, that's the question that all of us are asking. How about if it isn't? Well, if inflation continues to be persistent, even in Europe, because of global supply issues or whatever the case may be, well, if growth starts to slow, then stagflation worries are more of a fear, and that's going to be pretty bearish for the euro, in my opinion. That's why towards the end of the week, we really got to watch all the European PMIs that are coming out. All right, speaking of data coming out next week, we got Canadian inflation data. We have UK retail sales. We have CPI out of UK next week. We have the monetary policy meeting minutes for the RBA. That comes in on Monday night, Tuesday morning. So, and in the US at the very end of the week, we do have manufacturing and services PMI as well. So not a lot of data in the US, it's mostly going to be European, Canadian, and UK data. But overall, I think we're at really important levels. And once again, I want you to think a little bit about the yen and what it's doing and kind of the dynamics that have shifted. You got to be really careful with those yen pairs. I've seen them over the years. When they move, they can, a lot of people get lulled into the idea that they're only range-bound instruments. And when they break those ranges, I've seen them get really nasty in many directions over the last 20 some odd years I've been trading currencies exclusively. They can move. So that's why you need to be respectful that they are on the move right now, and just, understand the reasons why. And I think what I laid out for you is probably the reasons why. Anyway, guys and gals, if you liked the video, you liked what we do here, make sure you give us a thumbs up, subscribe to the channel. Both of those things are free. Subscribe to the YouTube channel so you don't miss any of our content. And then thumbs ups are always free. So appreciate you guys listening in, spending your time with me and our team. Have a great remainder of the weekend. I'll see you next week on the F.A.C.E webinar. Thank you.